Hello friends, this is Raj Sastry from Raj Option Trading. Today is Feb 26, 2023. Hope you're all doing well. In today's segment, we'll take a look at how to trade option like a pro using Optionstrat, one of my favorite platforms. It's a great platform, nice visualization, and you can just use this platform to get some options trading ideas and go from there. I use this platform on a daily basis because you can get very good ideas on what options to trade, which stocks to trade. So with that, let's jump in and get started. I will quickly take you to some of the pricing information in case you are interested, but you don't need to pay money. It's a free platform. You can see here it has got free platform. You just register with your user ID and password. You get access to a lot of the great features of Optionstrat. With the free, you'll get delayed prices up to 15 minutes, limited option flow, basic features, and so on and so forth. It's a great start. If you don't have it already, I recommend go subscribe yourself to the free Optionstrat platform if you want to learn more about options. Even if you already have options trading experience, if you don't have this free account, start with a free account. It's a great way to understand options better. Once you understand options better, then I would like you to look at this middle tier here. This is what I have right now. It's a great one, especially because you get a lot of features. You get live prices, market events. One of my favorite is option overlay. And you also look at chance of profit, a great one, net Greeks, and the IV chart. So it gives a good idea if you're serious about options trading. And if you want to take your trading to next level, you can go into the live option flow. It's about $50, as you can see here, but it's a great investment. But I recommend you to try free first and then try the next one, which is $49.99 live options tools. And once you make some money, and only then go into live option flow. I don't recommend live option flow for most participants, mainly because many times when you have live option flow, you can overtrade and generate some losses. That's why I don't recommend live option flow unless you are very serious and you want to trade a lot and you know what you're doing. Only then go into live option flow. Otherwise, I recommend you stay with free or go into the live option tools. And I might consider going into live option flow a little bit later in the year, mainly because it's got some features around saved filters, which is a great saver, and you could look at some of these performance tracking and historical searching. That's why I might consider this later this year, but right now I'm super happy with my live options tools, which is about $15 per month. Not a huge amount. I think if you go for an annual, it's about 17% discount. Comes around say $150 or so per year, which is very low amount compared to other platforms. So with that, let's jump in here and go into this Optionstrat. So normally, if you would love to understand what options are, you could go into build, and as you go into the build, as you can see here, you can buy long call. It kind of gives you a nice description about what long call is. As you hover around long call here, look, it gives you nice information about what is long call. You can learn about it. Long put, you can read through, gives you a nice diagram. So this is a great way to understand all option strategies, starting from novice to intermediate to advanced to expert. You could try all these things very easily with this platform, and that's why it's a great platform. Gives you a lot of free information. You don't need to pay even a single dime to learn more about all these option strategies. And now I will teach you how I look at trading ideas on a daily basis. Normally what I do is in the morning I go into the net flow, even over the weekend, and because I don't have a net flow live, I go into the flow summary. As I go into flow summary, it gives you nice information here. It tells you you on the given day, this is for last Friday, what's bullish and what's bearish, as you can see here. It's a great way to start, get some great trading ideas. And what I normally do, I don't want to look at all expirations. Typically when the market is tanking like right now, I will go into money generating mode, where I like to sell some put spreads way below current stock price and earn some money. And with that money I go into some great call options trades and buy some call spreads. So with that, let's go in here. What I normally do, I go in here and look at the expiration. Keep a watch here. I'm right here. Look at the expirations here. Instead of all expirations, I drag it all the way to say up to 60 days or so. That way I know, when I'm selling some put spreads underneath or credit spreads, I don't want to go beyond 60 days. I just typically stay here. And then what I would do is, to begin with, I will exclude stocks and look at the ETFs. That gives me good lay of the land, what's going good, what's not going great. So I also eliminate spreads for now, because spreads are, basically I want to know directionally how folks are doing. So that's why I eliminate spreads for now. All right, look, we got some nice opportunities here. So normally when the market is tanking like right now, there is a lot of inflation fears. My favorite go-to strategy is to look at great ETFs and indices like SPX as an example. Look, I got a great idea. This is what I've been doing on on a daily basis, especially when the market tanks big time. Look, we got IWM here, and look, there are about 20 order flow activities, and there is a negative. The moment you see a huge red line, this tells you Russell 2000 small cap ETF is really on a bearish mode. And when the ETF is in a bearish mode, you get great money, selling put spread or even put options for that matter, below the stock price. So once you get this idea here, then you could go into, one more screen here. You could open Optionstrat again. I have it right here. Look, starting with IWM here, I will tell you how I trade when the market is tanking big time. I go here. This is where I open one more Optionstrat here, just by saying optionstrat.com, and we already know by looking at the previous slide, previous page here, IWM is really big bearish here. I would if I want to look at this, I click on this here. Because I don't have a premium account, it tells you what's going on here. Somebody is buying 175 put, and looks like folks are buying the put here. It's a huge sweep activity that tells you folks are buying big time. Look at the premium they're spending. They're paying a lot of money here. They're buying 175 put as of now. And if you go back to IWM here, let me go to my favorite platform, Thinkorswim here, IWM. And look, IWM right now it's about let's see here, 187 here, and folks are buying about 175 put option here, somewhere down here, as you can see here. They're thinking, hey, you know what, they're looking at this level here. They're thinking stock may not, ETF may not come below this level. That's why they're buying some put option here. And if I go to option chain here to do some research here, I could go in here, and looks like they're buying March 31st and April 21, which is a good time frame. So let's go to March 31st right now, and we are right here, March 31st, and the folks are buying 175 put. Looks like right here. Look, they're making about mark is 183. That's the midpoint here. They're making great money by basically they're actually buying the put option right here. And when they're buying the put option, as you can see here, they think stock ETF may go below this price here. That's why they're buying the put option here. But typically what I do is really, because I know IWM very well, I've been trading it for a long time, I basically take the other side of the trade here and basically sell a put spread way underneath. So I will take you to this page here. What I do in the scenario, I love IWM. I go into a bull put spread. It's a great strategy. I love bull put spread, especially when the market tanks big time here, and I do it all the time with this great ETFs and indices like IWM if you want to trade ETF, or RTY if you want to trade actual index, and you could do SPY, SPX, QQQ, and NDX. You could do all day long. Great strategy. Right now, let's go into bull put spread here, and what we'll do is IWM. Look, instead of Apple, let's look at IWM. All right, so look, IWM, and typically you could go into, say, right now we are in 54 days out, which is not a big deal. I love to do, around the quarterly or a monthly time frame here. Look, we got right here, we are in April 21st. As you can see here, this is April 21st. You could do this, or you could even try March 31st also. Normally I'm comfortable within 60 days to expiration, especially for these ETFs. 45 days is my sweet spot, but 54 within 60 is okay too. And what I would do now is I would go in here, and I would typically look at Thinkorswim platform just to get some idea. So you could go here 54 days out. As you can see here, you can look at the put right here, and as you can scan through here, look, we got put going on here. Right now stock price is 187, as you can see here, and 52-week high 212, 52-week low is 162, as you can see here. 162 is right here. If you want to buy some outright, if you want to sell some put option, you could sell here. But with the market being fickle, you don't want to take too much buying power with this one trade. That's why I would go into selling a put spread. So you could go in here. Look, there is rich money here to be made. So you could go in here around say 29, 27, something along those lines here. Keep a watch on delta. You can go around delta, say 12, 13. Don't go beyond 16 delta. That's a little bit too risky. Look, probability of touch here is 36%. I would stay within 15 delta here, maybe say around this here. So with that, what we could do is really, normally I love round numbers, or you could do say 170 is a good one, or you could do 165, or in this scenario, because there is no good round number here, you could say 168 and 158. You could do that too. So with that, let's jump in here and go back here. Typically I'm very conservative. I don't want to really take too much risk. That's why I go and a little bit lower, much below the current stock price. So as you can see here, we can go here to 168 here. So let's go right here to 168. We are, as you can see here, we are selling a 168 IWM put, and for that, look, let's go with this here, because we want to do a spread. I want to buy back. I don't want to take too much risk here. I will take a $10 wide spread here. So 168, and say let's go to 158 here. Let's go slightly down. All right, so there is no 158 here, 160. You could go in here, or you could we can even look at 170 here. If you look at 170 here, 170 has got 16%, a little bit more for me. Let's go to 169 here. Let's go to 169. And let's see, 160. That's good enough. It's a $9 wide spread, and look, it's a $9 wide spread, as you can see here, and you get a net credit of $89. It's a good deal here, and you're risking, say your estimated margin amount is 900, and your max loss is 811, and your max profit is 89, which is same as your net credit. And look at this chance of profit. That's why I love trading these big ETFs like SPY, IWM, even though you are making a small money here, which is good. It's better than losing money. But look at your chance of profit. It's 88%. As long as the ETF stays above 168.11, right now it's 187, as you can see here. You can keep all the money here, which is $89. I do this all day long, for these ETFs like IWM. Most of the time, unless there is a huge downturn, typically stock will not go drastically down. If ETFs like IWM goes from 187 to 168, which is about $20 down, then the entire market is kind of crashing, which is a very rare event. That's why this is one of the safest strategies. You can do this as the volatility goes higher and the market tanks big time. You can keep selling these type of put spreads here. Your margin is just decreased by say $900 here, up to $1,000 max. But you can keep on laddering this. Don't sell all these put options at once as market keeps tanking like it's happening like last week. Just sell one today. If market goes further down, then you can basically go further down here. Instead of 170, you could sell maybe 165, 155. As the market tanks, you kind of keeps going lower and lower. Keep the $10 wide spread here, and keep selling. One of the greatest strategy. I love doing it all day long. I do it. I don't sell all of them at once. I scale in as the market tanks. Basically you keep selling more and more at lower prices and take it from there. All right, so now let's go into option flow again. Look, let's go back here, and we looked at IWM. Look, there are other things here. SPX, one of my favorites here. You could do SPX. It's a great one. It's actually, you can make millions just by trading SPX option. It's a great, great instrument to trade. So you could go back here to Thinkorswim and just put SPX here. I love SPX. You can do a lot of money by trading SPX, and you don't need to worry about about a stock, its earnings. If you trade a biotech stock, you got to worry about what's going on, FDA approvals. Just by trading a stock, index like SPX, all the noise you can don't need to worry. And you can keep selling. In this scenario, I would love to sell some put options. You could it's very super liquid right now. Look, it's about 3970, and 52-week low is 3491, and keep going here. Follow same methodology. Look at delta. Keep watching the delta here. I want to go around delta 10 or so, or even delta 12. Keep watching delta as you go further down here. Look at the delta. Look, we are right here, nice and high. Delta 10. You could go into delta 10 here. You could do $10 wide spread, say 3450 and 3540, 3430. You could just sell this spread here, and you could sell this put spread, vertical spread. Look, 3450, 3440 here, and you could do 3430 on the other side. $10 wide spread here, right there. And look, you collect $80 here. It's a great way to make money. And if you want to look at the chance of profit here, you can go back to my favorite platform here, Optionstrat. You can go back here to Optionstrat and just say SPX. All right, look, we got SPX coming up here, and what we're doing is we are doing a 3540, 3530 spread here, and 3540. I will go all the way to 3540. You can go further down here, 3540. Let's go further here. All right, we're going all the way down here, 3540. Because we don't want to lose much money here, 3540 right here. All right here, and we'll basically buy all the way to 34. Let's go back here and pull the thing. Let's see. Okay, oops, let's go back. Okay, SPX. All right, so easy way to do it is really, okay, we got this thing here. I can just delete this for now here, and just create one more here. I will remove this, all right, so I will add a spread here, and I will say sell put, and right here, drag all the way down here, 3540. All right, now I will basically add buy put here because we are doing a spread, as you know, and I will do $10 wide spread here, 3430. All right, look, we got our spread here, and I could go right here. Look, we are getting $80, which is not a big amount, but a very safe amount here. You're getting $80 here. You're taking a $1,000 margin or buying power reduction here, which is not bad. And look at the chance of profit, 93%. Most of the time this works out super well. If SPX crashes from 93,970 to our break even 3539, normally it doesn't happen all the time. It's if there's a huge market crash, only then it happens, but most of the time it's a very safe strategy. You could do this all day, do this all day long. Especially I love this strategy when the market is crashing like this, so you can make some great money. And theta decay is your friend as the market goes slightly higher or even stays at the same level. As long as it stays about our break-even level here, 3539, you get to keep your $80. It's a great way to generate income on a daily basis. And I typically scale, looks, as you can see, last week market kept dropping. I kept piling on more and more. As market drops, I take it to 3450. I will take it to 3430. I will do one more spread, and 3420. I keep $10 wide spread, scale all the way down as the market goes down. If the market goes slightly higher, what I would do is I will tag on the other side and sell call spread at the top here, so that way you'll make some money. Once you have call spread at the top and put spread at the bottom here, you're not taking on more margin risk here, because stock can only go either higher or lower. The moment you add, as the market goes higher, once you add your call spread above the current stock price, you don't incur a single additional buying power reduction. Same buying power reduction that you already incurred when you sold this put spread will suffice. That will help you. You don't need to incur additional buying power reduction when you tag on a call spread at the top or sell a call spread at the top here. So that way you earn more money. So by adding call spread or selling call credit spread as the market goes higher. All right, so you can go back to this one here. This is about these ETFs here. Look, I love SMH. BITO is a great one, and you could look at XLE. It's a great one. You could do same spread here. You can earn some money. Most people love to get some big dollar amount, but I love getting steady income and very low risk, especially SPX, IWM, and RTY, QQQ, NDX. You could do all day long. Even FXI. Look, China is slightly bearish bearish, you could sell some put spread, make some great money. So this is about ETFs, and you could look at other ETFs, and I would typically start here. This is where you could make some great money by looking at this. And on the other side here, look, you got some of these positive ETFs. Look, KWeb, which is Chinese internet name, doing well. When there is a positive thing like this, I would go into Thinkorswim platform again, and I will put KWeb. Let me remove this for now, and you could go to charts and put KWeb here. I typically look at the RSI. Look at the RSI here. It's 32, and this gives me a great idea. Look, folks are buying KWeb here. If I click on it, look, they're buying 29 call, buying 29 call again. So what you could do is really you could go back here, look at the 29. It's somewhere here. They're thinking it will go higher. And what I would do in this scenario is I would basically buy a little bit lower. I would buy, right now stock is 28. I would probably buy 25 and 30 call spread here. You could go here and go to KWeb, and I would go a little bit, 82 days is good enough. I typically even go a little higher. I would go to say, I think 82 is good enough. We can stay with 82 here. It's at 28 right now. You could go here, sell a call spread, and say 25 to 30 here. Let's go 25 to 35, $10 wide spread here, and you could actually buy or sell 25 and 35. There you go. You pay $4, and it's a great way to make some money here. And if you confirm and send here, your $10 wide spread, you're paying around $4.39. The remaining $5 and change is your profit potential. You're doubling your money here with this trade. I recommend this. When you see some of these ETFs, try to go higher. I would do such trade here. Even IBB is a great one here. You could do a call spread. You could buy a call spread on the IBB also. And normally I love to look at RSI and go back to charts here. Look at the RSI. Look, even this one is beaten down right now. You could do same thing here. Look, stock price is 126 right in the button here. You could sell, you could actually buy 120, 130 call spread here, and I would go, maybe 110 days is great. You could go here and go into 120, 130 here. So look, we got 120 right here. You could basically buy 120, 130 call spread here. There you go. Once, look, you're paying $6.25 here. Remaining $4.75 is your profit potential. You're almost doubling your money, but it's a great way to really make some money. You don't want to catch falling knife here, so you sell put spread way underneath when there is a bearish market, and when the stock or ETF is going higher, you buy a call spread, and you can take a $10 wide call spread and make some money. But if your account is bigger, you could basically sell a put option way below and sell buy a delta 70 call option. But for most people, I recommend doing the spread, so that way, especially on the put option side of the house, if you don't sell a put spread, if you just sell a naked put, as the market tanks, your margin balance will increase. That's not a great way to sleep peace at night. All right, so this is about ETF, and I love to do same thing on the stock here. Keep watching. I'm doing here. I enabled stocks here. I will just click on ETF. I don't want to look at ETF right now. And same thing, 60 days. This is a great way. Look, a lot of people like to look at some of these stocks like ChargePoint and say Baidu and Alibaba, but I want to look at stable stocks, especially when you want to make money. Just keep those noise out. Don't look at the flashy stocks that are in the news. Instead, look at the great names here. Look, we got Apple and Microsoft. Both are my favorites. Look, they're in a negative sentiment right now. And look at JP Morgan, same story, negative right now. I don't want to look at stocks like KSS, which is Kohl's, BBY at this time. Look, Google, a great one. It's huge, large cap name, as many of you know. I would also do one thing when I want to sell put options. I don't want small cap. I don't want mid cap. I don't want to be a hero. Instead, I want to make money. That's why I weed that out and go after these big names here. That's where I make money. And normally in this market, I try to avoid Chinese names because they tend to act a little bit wild. So I want to make some steady income here by really taking the noise out. Look, we got Apple here, my favorite stock. Microsoft, great one. I love AMD, good one here. So I would do same thing here also on the negative side here on the stock that I love, like Apple, Microsoft, NVDA, great one. AMD, Google. I basically sell put spreads way below. Even Qualcomm, I like it. Home Depot, earnings is done, stock is down. You could do same thing here. I would do same thing. Let's start with Apple. You could go to this platform here and just say Apple here. All right, so look, Apple is at 146 right now. I would go into Thinkorswim platform here, bring up Apple. All right, Apple, look, stock is coming down, as you can see here. IV rank is 22 and IV percentile is 30 here, which is not high, but earnings is over. You do not have an elevated IV rank at this time, which is okay. These stable stocks, don't worry too much here. Apple is Apple. So right now earnings risk is all done. They had earnings a while ago. So what you do is you could go into option chain here, bring up Apple, and your basically stock is bearish. You want to sell put option, and you could go here 54 days out. And look, we got look at the delta here. Go around delta 10 or so, or in case of Apple, you could go a little higher. Look, you could go to delta. I think this is good enough. 130 is good. You could just sell 130, 120 put spread here, and go in right here vertical. 120, go down to 120. Look, it's a nice money. You are making 88 cents. Great one here. And let's go back here to optionstrat.com here, and April 21, which is 54 days out. We want to sell at let's see here, 130, 120 here. I will pull this to 130 here, 130, 120, $10 wide. Look, we are collecting $88. Look at the chance. Max profit is what money that we got, which is net credit. Look at the chance of profit, 87%. Great. As long as stock stays above 129, you get to keep your money. I do this all day long. When the Apple drops, I slowly leg in here. Start with the 120, 130 to begin with. If Apple falls further, I will go like, say, I will sell 120 and buy back 110. I scale up like this here, and if Apple starts going higher, I will start selling call spread at the top here, so that way also I make money here. And if you have premium here, which is $125 or so per year, you can see chance of profit, and it will also show you, look, we got these small bars here, as you can see. Look, we got these bars. This tells you the volume. If you click on it, look, this is a high volume here. It kind of tells you where the volume is high. By looking at this, you can see here, call volume is high here, put volume is high here. You got some visible indication here. All right, so I would do this all day long for stocks like Apple, and I would do same thing for my favorite names. NVDA is a great one. I love this one as it goes down. It's a great AI play, as many of you know. ChatGPT and other AI platforms use NVIDIA. I would do same thing for actually AMD. Baidu, I would skip here with the Chinese names. It's a little not great to sell put options. You can get your head handed to you if the stock goes other way. I love to do it for Google. I would avoid stocks like Unity Software. It's not getting good footing. It's been sliding all day long. And I would go into stable stocks like Qualcomm. I've been trading this Qualcomm stock still since .com. It's a great one to sell put option, and look at some great ones here and go from there. And you could also look at on the positive side, look at Meta Platforms, Netflix, JD. JD I would avoid here, and some of these great names. Even Square is my favorite. You could basically look at the IV rank on these names here. Look at Meta as an example. If the IV by looking at RSI here, like Meta as an example. Look, Meta right now, RSI is 57. I would not buy call option at this time here. Instead, I will go down the list here and look at a few more here. And I would probably look at Square. Let's see what's Square. All right, look, Square, it's a 51. It's pretty okay. Their earning is done here. They've done good. I'm pretty comfortable in selling buying a puts call spread here. I would go here and go to 82 days out or even 110 days out here. Right now it's 77 here. I would go 110 days out. I would buy 75.85 spread here. Look, 75.85. And I would buy call spread here. It's a debit spread. You 75.85, $10 wide spread here. There you go. Look, you're paying $450 here. It's a $10 wide spread. Remaining $550 is your profit potential. You're doubling more than your money here. And if you go back to the options platform here, give SQ, and we are looking at 16th June here. Let's go to 16th June. Right here, it's 110 days out, and you're doing 55 and 65 here, actually 75.85. Go here, 75 and 85, $10 wide spread here. You don't need to spend too much money. Your net, let's remove this here. We're actually buying call spread here, not selling put spread. There you go. Remove, and you could add a call spread here. You can say buy call. You're buying a call at 75, and you could sell a call here. You could sell at 85, $10 wide spread. There you go. It's a good one here. And normally when the RSI is in the middle here, you could also tag on one more this is a great stock. I love Square here because earnings is just over. Just to finance this deal here, you're paying let's go back here. So look, you're paying $450 just to finance this year. You can sell some put way below here. So I can tag on and add a put spread here. I can say sell put, and when you're selling put here, I'll go back here. You don't want to go into way past here. I want to go 54 days out. Right here is a good one here, and I will look at the delta as usual. Keep watching the delta here. So 65 is a good one here, 19 delta, and 65, 55 could be a good one here. So I'm comfortable here. I would sell 65, or even let's do one thing. Let's not take too much risk. Let's do 60, 50 put spread here. Go back here, and I will add a put here, 60, and I will buy back at 50. Let's add one more. I'm buying a put. I'll buy at 50, as you can see here, $10 wide. Look, now I reduced my amount required from 450 to 273 here. And for a stock like SQ here, I can also sell one more call spread all the way at the top here. I would go here, look at delta as usual, look at delta 10, keep watching delta here, delta look 10 right here, around say $100. So I would sell one more call spread, 190 spread here at the top. Look, we can go here, add, and we could sell a call. Let's go to sell a call. We'll sell a call at 90. Let's see here, right here, 90. Currently stock price is at 77, and we'll go to 90 right here. So we are selling 90 and we'll buy back at 100. We'll add one more here, buy call, and we would buy call at 100. We are taking a $10 wide spread here. Look, right now our net debit is $38. It's not too much money. It's a pocket change. And look at the maximum profit here. Our maximum profit potential is $962. You're paying $38 to make $962, and chance of profit is comes down in these type of strategies. If you want to finance your money, you could do something here. In a nutshell, what I'm doing is really basically buying a call spread, my bullish intention here, and financing that with the put spread at the bottom here and a call spread at the top. So basically, I finance my call spread buying with a put spread selling at the bottom and a call spread selling at the top. So that's why my net debit came down here. It's a good strategy in the range bound market like it's right now. You could do this all day long and make some great money. So we'll wrap it up here. Thank you very much. This is a great platform. If you have not looked at Optionstrat, I highly recommend Optionstrat. Take a look at it. Thank you very much. Happy investing and trading.